Hi, I'm Mike Sintolo, editor of Cabot Market Letter and Cabot Top 10 Report, and I'm here with your Cabot Weekly Review. Well, this remains a unique and grinding type of market environment where the major indexes are certainly not in uptrends, but they're not in defined downtrends either. While individual leading stocks are doing okay and a lot are building bases, but there's no real money being made on the long side. So it's sort of an in-between market. It's been that way for a few weeks. And it probably means you should just go with the flow. Pick your spots, pick your stocks, have some cash on the sidelines. But for the most part, work on your watch list and be ready for the next time the bulls take control. For some illustration, let's take a look at a few charts here. Here's the NASDAQ composite. And you can see the last couple of weeks have been sad. A few gaps down, no real buying. Now it's starting to sell off again. But taking a step back, you can see we're still in this broad trading range. It's not really a good thing. It's not a bad thing. It is what it is. One thing I wanted to point out is if you can come down here and look at the volume, ever since this point right here, which was May 21st, so we're talking about 3 months at this point, there's been 1 and 2 days where the NASDAQ has been up on above average volume in 3 months. And one of these days, this one right here, this huge stick, was actually when the Russell 2000 was rebalanced, which artificially inflates volume. The market wasn't doing anything that day. I really think it would have been below average volume. So you really only have one real day of institutional buying in the last 3 months. Now, there hasn't been a ton of institutional selling either. It's been a low volume environment. But the point is that they're not really pushing any stocks or many stocks to new highs and just keep buying them and buying them. They're buying them after 3 or 4 bad days. There's some support showing up, but they're not really letting loose on the upside. So just until that changes, you're going to want to keep things close to the vest. You can see all the moving averages for the NASDAQ are pretty much in the same spot, and they're all kind of going sideways. That's just the environment we're in. Now, if we really explode to the downside here, that's going to be different. Obviously, that's going to call for a more defensive posture, very heavy in cash, maybe 70% in cash if that happens, whereas right now maybe around 40 or 50. Conversely, if we can really break out and some of the stocks I'm about to show you can break out of their trading ranges, then that's when you're going to start a new buying spree and hopefully become heavily invested. Onto the leading stocks, there's the usual suspects that are kind of grinding higher. Here's VMware, VMW. It's had 3 pretty sharp corrections here, but each one, much higher low, much higher highs. So we'll see how it goes if this can push out here again. Baidu is still acting well. It's not powerful, but consolidated here, moved to new highs. Now it's pulling back a few percent. You do have that. What's interesting that I noticed this week is there's a lot of stocks from a lot of different sectors that are actually building launching pads. Now, I wouldn't go out and buy them, but it is interesting to note that a lot of things are ready to run if the market gets out of its own way. Here's CB Richard Ellis, CBG. This is the #1 commercial real estate firm in the world. And just notice it's had a kind of long correction, and then all of a sudden, big earnings growth. Everyone thinks commercial real estate's a bad place to be, but earnings are turning around in a hurry. A huge earnings move. And just notice here, the last couple of weeks, as the stock has kind of formed what's known as a handle, there's been absolutely no selling, even though the market's had a really rough go of it and the unemployment news has been bad and all that stuff. This stock is setting up just fine. Okay, Chipotle Mexican Grill, CMG, so CBG. This is a little bit shallower, but a huge earnings move right here a couple of weeks ago. It kind of got back up towards the top of its range. And as it's backed off the last couple of weeks with the market, again, there's been absolutely no volume, not even compared to the earnings day, but just compared to its average. So there's really no selling here as the stock has formed a nice consolidation. Peabody Energy, it's a coal stock, BTU. This is a longer, deeper base, but you can see here, nice consolidation. It ramped up. You got some nice buying volume in here on the right side of this base. And as the stock is kind of sloppily sold off here with the market, again, there's been no selling pressure. AGU, this is Agrium. It's a fertilizer. Now, obviously, fertilizers are in play with the potash news that might be bought out. But the point is you got, a pretty deep base. It undercut, really shook out all the weak investors. It come back like a house of fire here on big volume. Maybe the stock can do what the others are doing, pull back for a couple of weeks as this acquisition news sort of goes by the wayside a little bit, gets off the front pages, maybe volume quiets down. Again, you might have a buyable base. Now, I wouldn't go buy these now, but you want to have a list of these stocks so that if the market turns around, and it can do so in a hurry, something like a CB Richard Ellis or a Chipotle Mexican Grill could all of a sudden break out here above 17.6, 17.7, and start heading northwards for a nice 20-30% move or even more. You want to be on board right when it breaks out, as soon as the market is turning, not 2 weeks later when everyone's talking about it on TV. So the goal now is to stay defensive, but definitely work on your watch list. Don't get too optimistic or pessimistic. Just wait for the market to show its hand. If you do that, you will never go too wrong. Well, that's all the time I have for today. Thanks for listening, and come by again next week for another Cabot Weekly Review.